Hey, Michael. It, it's TK. Hey, unfortunately, we can't hear you very well. I don't know if your microphone is not working, but it's a real struggle.
Well, thank you. Give me 1 second. I'll see if I can adjust my microphone here. I'll try to talk into the camera. Can you hear me a little better when I talk into the camera?
Yes. Yeah. It
Yes.
sounds better.
Okay. I apologize for the awkward appearance. I'll talk into the microphone as best I can. For those of you who do not know me, my name is Michael Drummonds. I am a 2-year rates and forms analyst. I mostly review property and casualty policies, but I do receive a little bit of overlap with health insurance when I review travel insurance and paid leave Oregon filings for equivalent plans. We want to thank everyone for being here today and for taking out the time of their schedules to receive our information, ask us questions, and make this a worthwhile conversation today. Thank you so much. And I will go ahead and start with just giving you a brief overview of the meeting. We will start with our opening remarks from TK Keene and Cassie Susi. We will then have a legislative update from Raven Collins. We will then have a market conduct update from Anna Pace. I will then talk about variability, and then I will talk about pet insurance. And then we will have cancellation of insurance from Jan Vitus. And then we'll have a product standards update from Carolyn Kalb and Jan Vitus. And at this time, I'm going to hand it over to our administrator, TK Keene, for the opening remarks.
Hey, folks. Thanks for joining today. I'll keep it brief. I'm having some connectivity issues on my end, but just really appreciate everybody coming together. We made it through collaboratively and cooperatively through the wildfire season for 2023, it appears, and just appreciate that partnership so much, and would be remiss for not mentioning it. And I know we've got a lot of work ahead coming out of the 2023 session as we dive into rules and additional guidance from legislation that passed. But it has always been a partnership, and just appreciate the good conversation we're about to have here today, and hand it back over to Cassie.
Great. Thanks, TK. For those of you I haven't had a chance to meet, my name is Cassie Susi. I am the Property and Casualty Product Regulation and Compliance Manager for DFR. Echo some of the same sentiments that TK mentioned around just the partnership and collaboration that we had through wildfire season, which thankfully was a little less intense than previous years. And appreciate the open dialogue that we were able to have throughout our wildfire season. And now looking to sort of kind of completing the work in terms of some of the follow-up items from the 2020 wildfires. We've got a data call out to specific insurers that had claims open during that time, and just following up to see the status of those claims. So want to mention that. Another thing, want to just put on folks' radar in terms of thinking about this later half of the year is, if you have any feedback or comments or suggestions for this meeting or for other ways that we communicate with you all, happy to receive that feedback and send it my way in terms of thinking about just how we connect with you all through these meetings, and what might be what is working well and what might be improved upon. So I'll just put that as a plug as we head into the last couple months of 2023. But I'm happy that you all are here today, and we've got a wealth of information to share with you all and have a conversation about for today. So I'll stop there and pass it along to my colleague Raven, who I think is up next to talk about legislation that was passed.
Okay, thanks so much, Cassie, and hi, everyone. Good afternoon. I'm Raven Collins, Senior Policy Advisor. I just have a brief update for you on the implementation of these 3 bills. So first, Senate Bill 80. So part of this bill was the renaming of the wildfire map to hazard from risk, and the more robust outreach that was required around the state involving county commissioners and staff, local officials, and community members. That is all underway, and there's no specific target date for the map's release at this point. Last week during legislative days, there was an update that was given in the House Interim Committee on Climate, Energy, and the Environment that was focused on the program funding around landscape resiliency and community risk reduction. And then lastly, as part of this bill, I don't believe that the rulemaking process by the Department of Forestry has started yet for the prescribed fire liability pilot program, but we are looking forward to that. Senate Bill 82. So of course, the major aspect of this bill is providing information about rating and underwriting decisions related to wildfire risks through disclosures to consumers. And, I really appreciate all of the questions that were sent in. Our draft guidance document is currently with DOJ. And after that's reviewed, we will share that with you as soon as possible. And another note that our product standards have been updated and are currently posted on our website, containing those Senate Bill 82 requirements. And then finally, House Bill 2982. So this bill requires insurers to offer a minimum of 70% of coverage previously purchased without requiring inventory documentation if certain elements are met. There was a rulemaking advisory committee meeting a few weeks ago. The draft rule is pretty straightforward. It was written to comply with ORS 742.053. And it references the model form that will be on DFR's website to attest to the requirements under that bill. I sent out a draft form to the advisory committee members. So I'm looking forward to feedback on that and consensus. And there's going to be a public hearing on November 15th. And public comments will be accepted from then until November 22nd as we prepare for the January 1st effective date of that bill, or of that section of the bill. So any comments or questions on that? There's still a lot more to come with all of these, but those are kind of the status updates. All right, if not, thank you so much. I'll pass it back over to Michael.
Thank you, Raven. Next, we will turn to our market conduct update and hear from Anna Pace.
Hello, everyone. Good afternoon. My name is Anna Pace, and I am a property and casualty insurance examiner for the DFR. We wanted to take the opportunity of actually providing you with an update as to where we sit with current exams. The program has actually completed the exam cycle for the Oregon domestics, and we have gone ahead and provided a link on the slide so that you are all aware of where those finalized reports and cover letters have been published. If you are curious about those, go ahead and follow the link that we provided. With regards to what we're currently working on, we're actually in the middle of the exam cycle of nationals, and we are continuing to communicate with insurers that will be receiving call letters prior to actually sending those call letters. We did want to take the opportunity of highlighting that the scope of the exam, it is the same that for the exams that we conducted on Oregon domestics. And with that, we wanted to provide, be transparent with industry and let them know what we have been looking at and what we will continue to do during this exam cycle. So on this note, we have been verifying compliance with the three different areas. Number one, the codification that resulted from the implementation of House Bill 3272. And of course, this includes the updates of all of the insurance forms for homeowners and also the communications that have been sent from insurers to policyholders. In addition to that, we're also verifying compliance with the wildfire emergency order that was issued back in 2020 after what we called the Labor Day fires. And lastly, we're also confirming and verifying whether or not there were premium increases in the zip codes that were outlined in that bulletin tied to that emergency order, and see if wildfire claims that were actually filed with insurers were the primary contributing factor driving those premium increases. Like I said, we wanted to really take the opportunity of highlighting the work that the Market Conduct Program has been doing in the past, and what we continue to do. And we welcome any concerns or any questions that you may have. And on that note, we went ahead and provided you with our Outlook inbox. So Sandy and I are always here to hear from you if you have any questions. May I provide any clarification? Okay, I'm going to go ahead and hand it over to Michael so that he talked to us about variability. Thank you.
Thank you so much, Anna. My name is Michael Drummonds one more time, and I will do an update about some variability trends that we have been noticing on the product regulation side of review. I guess before I get too far to the substance, maybe I'll just do a brief recap of what we mean by variability, because my assumptions of assuming that people know what I'm talking about have betrayed me before. So when we refer to variability, we're referring to the tendency of insurance carriers to use bracketed items that signal to us that they are intending to alter the terms at various times to kind of based on the policyholder. But in a nutshell, it's a use of bracketing. Ultimately, we do have an expectation when we review these filings that we are able to decipher what a policyholder would actually read. And I think to elaborate on that a little bit, it will probably be helpful to talk about some trends I've noticed where we don't feel like that expectation is being met. I will see from time to time a lot of statements of variability that either don't have a whole lot of the variable items in the filings even reflected in the statement of variability. That's really one of the first red flags for me as a reviewer. I also will throw some yellow flags up when I notice that there are variable items reflected, but there's really no explanation for why they're being used as variable items, or the form numbers or page numbers where they are in the filing. So ultimately, those things lead us to have to dig a lot further to find out what a policyholder would likely see. Those are things. Another thing that I have noticed in my time is sometimes there will be statements of variability that just simply are what we consider excessive. We've seen some that are drag on for 40 or 50 pages, and at that point, it's almost like that's really too much for us to actually follow. So I have seen some that are just simply too long. That being said, it always varies. We don't really have a specific number of what we'll accept or not accept. It just depends on how good that statement of variability is. If you have something that, is maybe not ideal in terms of quantity of pages, but it just really explains the variable items well, we're more likely to be comfortable with that. We have been noticing that there really has been an increased amount of variability among multiple lines of insurance. And so this will potentially create transparency issues for us if we don't see the information that we think is sufficient to lead us to determine what a policyholder would actually read. When that happens, the filing will likely receive objections, either in the form of, hey, explain why you're using so many brackets, or we could do John Doe requests. And by John Doe requests, we're referring to requesting samples of what a policyholder would read. In the past, I have had some insurance carriers say, well, I actually don't know what a policyholder would see. It's going to be totally based on the policyholder. Well, Oregon's a prior approval state, so if the insurance carrier tells us they have no idea what a policyholder is going to see, that will be problematic to us. When I've had those conversations, then the insurance carrier will look into it and then submit John Does that we could make sense of. And in my experience reviewing John Does, it's the most helpful when they're placed under the supporting documentation tab, and then I could line it up with the policy that we have on the form schedule tab. I will go ahead and pause there and see if anyone has any questions regarding this information, as I do recognize that's quite a bit of information.
Michael, it's Kenton Bryan from Northwest Insurance Council.
Hi, Kenton.
Hi there. I guess to make sure I understand, as these things come up, and it sounds like you're seeing it more often, are you notifying carriers and letting them know about the objections that you have, or just dealing with it on a one-on-one basis as these issues come up?
I'll try to give you as simple as answer as possible. I would say a little bit of both. So I'll start by saying we do object, and we do lay out kind of what our concerns are. But that being said, what those concerns are going to vary based on the filing itself. But I guess I would lead more towards the first one of those, is we do try to tell the insurance carrier what our concerns are. And in my experience, there have been times where it may not be clear what we're asking, and when that happens, I'm totally open to meeting with insurance carriers in a virtual meeting or an email. Or having a phone conversation. So, yeah, we do try to communicate as best we can what our specific concerns are.
Okay, in other words, so if a form filing is being held up for some reason, the insurer isn't in the dark necessarily as to what the problem is. There's going to be a fairly direct communication from DFR, so they know what it is they need to fix.
If it's a variability issue, then yeah, there'll be times where we'll put a notification saying, hey, we haven't been able to review the other substantive content of the filing beyond variability. That kind of does depend on the filing. Sometimes there's not a level where we feel like we have to not proceed with our review until that's resolved, but sometimes there just frankly is such a high level of bracketed items that we do think we need to resolve that before we proceed further, if that makes any sense.
Yep, that's helpful. Thank you.
Any other questions? Seeing none, I'll go ahead and transition into pet insurance. Do keep in mind that if you do have any questions at any point, you're more than welcome to reach out to me outside of this meeting, and I'm happy to clarify anything further. So for pet insurance, I want to go over a couple of trends that I've noticed in my 2 years reviewing pet insurance filings that have been major concerns to me. And then I'll talk about some of the main concepts reflected in the NAIC model law for pet insurance. So the first big thing that's concerned us as regulators in Oregon is the use of exclusion/waiting periods. I will typically see waiting periods drag out for as many as 6 months, and we will be objecting to that kind of a duration. The reason being, we don't consider it fair or equitable for a policyholder to be paying a premium and then be told that their claims are not going to be paid for 6 months into their year-long policy. To us, that's half the policy, and that's simply too long for a policyholder to want to be compensated for claims that would otherwise be covered and then be told, sorry, this is excluded. So that's going to trigger objections. If we see 6-month language for exclusionary periods or waiting periods, that we will object to that. I also will commonly object to some age restrictions depending on what the age restriction is. One thing I'll note is that kind of give and take, a typical life of a dog is about 11 years, sometimes a little bit less, sometimes a little more, but right about 11 years is kind of the benchmark. I've seen some policy language that says they'll deny all claims once the pet hits age 6 or older. So if we see 6 or 7, I'm likely to object to those and ask why so low. And I'll usually give the insurance carrier an opportunity to explain. But yeah, those are going to be a cause for concern. We see age restrictions that's young into the pet's life. And I also do see a lot of pre-existing condition provisions that do concern us. We do acknowledge that there's really nothing currently that says insurance carriers can't use pre-existing conditions, but sometimes I feel like there is kind of an arbitrary determination on how it's established that a pet has a pre-existing condition. Some of the language that's less concerning is when I'll see language to the effect of based on a determination from a licensed veterinarian and then kind of prescribe the means of that process a little bit. But those are really I call them the big 3 concerns that I really look out for the most when I review pet insurance. I also would like to just bring it to your attention of the NAIC model law And this is mainly just an FYI that this is out there. And I do think it would be beneficial to go over a little bit about some of the information that's in the NAIC model as it relates to pre-existing conditions and exclusion/waiting periods. So for pre-existing conditions, the NAIC model law would require the insurance carrier to have the burden of establishing the pre-existing condition. That's one major thing I just kind of want, as an FYI, throw out there. And then for exclusionary and waiting periods, there are a number of limitations placed on those, such as there really is no exclusionary period or waiting period if the claim has to do with a pure accident per se. There's orthopedic conditions that could be subject to an exclusionary period, but those would be subject to a 30-day limitation, not a 6-month limitation or anything like that. And then I also just want to note briefly that the NAIC model law does emphasize that the policyholder is supposed to have an option to waive the exclusionary period. And the only parameter around that is that the insurance carrier could require that the policyholder have the pet examined by a licensed veterinarian. But I mainly just want to throw these out there. This is an NAIC model law. We do encourage you, of course, to adjust your filings accordingly. We currently have no position on the NAIC model law at this time. This is mainly just an FYI more than anything. Any questions regarding that? Seeing none or hearing none?
Hey, Michael, sorry.
Oh,
here,
go ahead.
jumping in again. I always have a question.
No worries. We're here for questions.
Thank you. On the model law, I guess I just want to understand what the baseline is for your current regulatory interpretations. Is there a statute in Oregon that governs this activity by insurers, or is it just basically allowed because nothing prohibits it? Because the state hasn't adopted the model law. Is there another statute in place already in Oregon?
Yeah, an excellent question. I don't recall there being a specific law that's really on point. So, I mean, that's one reason why we do allow pre-existing conditions, because we really, to our knowledge, we don't have an Oregon law to our knowledge that would really prevent that. As far as exclusion periods go, we do have a statute that does allow us to step in if we do consider a term to be inequitable or unfair. And that's what we've used for the exclusionary period objections. But as far as laws go, there's really not a ton on the current books about pet insurance to my knowledge.
Okay, that's helpful. Thank you. Appreciate it.
Any other questions? Hearing none or seeing none, I will go ahead and pass this over to Jan Vitus, who will provide an update on cancellation of insurance policies.
Good afternoon. I wanted to talk about cancellation. We have the OAR that relates to commercial package policies that's been updated in the last year and a half. And it's 10 working days advance notice for non-payment of premium and a 30-day advance notice for any other permitted reason. So when you look at 742.702, it gives you a list of the permitted reasons. And so that's where we're pulling that list from. Then the non-renewal piece is a 45-day notice. Excuse me, the administrative rule for that needs to be updated because it currently shows 30 days, and we're going to update it to the 45 that's found in 742.706. Our product standards checklists are all in the process of being updated or have been. And so you'll notice there's consistency pretty much across the product standards. We're wanting to make this process less confusing for policyholders. So you don't want to have multiple different kinds of notice listed within a given contract and have it be where the contract holder has no clue what the expectation should be when it comes to a cancellation or non-renewal of their coverage. Finally, the the regulations that are posted in the statutes, those are minimum requirements. And so if an insurer wants to use something more than that, we're fine with that. I know there are some states out there that will not allow your contract to contain anything other than their specific requirements, even if yours are more generous to the policyholder. Oregon doesn't have that kind of a requirement. We're okay with you using 60 days across the board if that's what you choose to use as an insurance company. And also, that's why you'll notice that our stuff says 10 working days for non-payment and 30 days for any other reason, because we're looking for the consumer protection piece. That's our job, basically, is the consumer protection side of things. And so we want to be sure that we're giving the policyholder sufficient time to replace their coverage if that's what they need to do. Do you have any questions? Hearing none, I will pass this on to Carolyn Kolb to talk about the product standards that we have been working on.
Thanks, Jan. Good afternoon. My name is Carolyn Kalb, and I'm a rates and forms analyst in the P&C section. And today I just wanted to talk a little bit about our product standards updates that we've been working on. So we currently have the following checklists that are updated and published: a title, which has some major revisions, stop loss, property, crop, hail, and aircraft, and portable electronics should be coming very soon. And all of these can be found in SURF and on our website. And then I basically just wanted to share just a few of the updates that were made. I'm not going to go through everything today, but just a few. So as far as wildfire risk, we have clarified on the property product standards that wildfire exclusions will not be approved. And we've also clarified that Oregon has taken a firm position against any restrictions or conditions on losses relating to wildfire, which could include definitions, deductibles, restrictions, or exclusions. All of those would be prohibited. We've also clarified that the hostile fire definition cannot be used to exclude coverage for wildfires. And still on the subject of wildfires, we've also added a section dealing with Senate Bill 82 and House Bill 2982 on the property checklist, providing further guidance. Regarding Senate Bill 82, as previously covered, this bill is effective January 1st, 2024, and any forms relating to compliance with this legislation should be filed by November 1st, 2023. And so our forms now include guidance on the notice that needs to be filed for review and approval, and a few other updates that came out of Senate Bill 82. And relating to House Bill 2982, again, we've included information on this on the property checklist, and we've included guidance on this new legislation relating to loss settlements. Regarding both Senate Bill 82 and House Bill 2982, we ask that insurers, when you're filing those forms that should be in, I believe, by November 1st, that you put something on the first screen, that general information tab, or something identifying these filings as relating to the new legislation, so that we can get these flagged and prioritized, so we can get through those forms before the first of the year. So just put some sort of information in that's relating to that new legislation for us, because that will be helpful, and it will just get the forms to us quicker, and we'll get through them quicker. Lastly, we've also added to our intentional act section it's been a little bit revised, but we've also added the 2 new administrative rules relating to innocent insureds. That section has been updated on the checklist as well. We've made some slight modifications to the arbitration wording. And we've made some modification to the cancellation on the property checklist. We've basically just provided further clarification for cancellation timeframes relating to commercial policies that include commercial liability, and we've provided further guidance for homeowner policies. And I think that's it as far as what I wanted to cover. Jan, did you have anything else you wish to add about the product standards updates?
I did want to let those listening in on the call know that we've received a number of filings already, in particular from Insurance Services Office and AAIS, to take care of the Senate Bill 82 and the House Bill changes. And those have been on hold waiting for the publication of the product standards updates. And so the analysts who are on these filings will be sending information out to those filers as soon as we possibly can, attaching that updated guidance so that you can make sure that what you filed is in compliance. And that'll be before we start our review. That way, you'll know that you're in compliance, and it will help to facilitate our review. Everything that we want to do with regards to these specific filings is to facilitate the review process just as quickly as we can, because we know that you have IT requirements on your side and publication requirements and things like that. And so we want to help you get there as quickly as we can. So anything that we can do between the two of us to make that process run better, we're more than happy to do that. That's all I had to add.
Thank you so much, Jan. Is there any questions or comments, concerns? Okay, I guess I will turn it back to Michael.
Thank you, Carolyn and Jan. At this time, we'll go ahead and we will open it up to questions that anyone has. And please don't be shy. We love your questions. And if not, I'll add something, but I'll let you give the opportunity to ask questions first before I add anything.
Well, I see an open microphone, so I'm going to ask a question. This is Ken again. Going back to what Raven had to say about the sort of legislative update, that brings to mind the question of whether or not DFR is planning to bring any legislation in the upcoming 2024 session. Has that been discussed, or is there anything on the calendar as far as developing legislative proposals, anything you guys are planning to run in the short session?
Oh,
Yeah,
TK,
this is
go for it.
TK. I can speak to that. So in 2024 short session, we don't get any bills typically as an agency. There's a very limited number of bills, so we would not be putting anything forward. Whether legislators decide to address wildfire or something, something else in PNC, that's up to them. But nothing comes to mind right away. Not to say that there's not something out there or multiple things out there, but just there's not, a front burner issue that we're aware of that's planned to be dealt with in 2024 to date. But of course, we can stay connected on that.
Great, thank you.
Any other questions? If not at the moment, I might just add something about variability that I actually meant to cover in the presentation, and I do apologize for letting that slip my mind. But I think for our purposes, when we talk about variability, it might be helpful if I distinguish what's the kind of item that really draws our concern and what's not so concerning. So administrative terms, such as the basic policyholder information, so the policyholder number or the policyholder's address or the effective dates of the policy. We expect those kind of things to vary. That won't draw our concern. One thing that I have noticed is that there are some insurance carriers that will try to vary the advance notice for cancellation, and that will draw our concern, and mainly because we do have minimum requirements for cancellation that are reflected in our product standards checklist for the different lines of insurance. So those kind of things will draw our concern because we want to be able to verify that the term is going to be in compliance with the minimum requirements as reflected in our product standards checklist. If we have bracketed items for things that are in our product standards checklist, then it's harder for us to really verify that compliance. So that's something I thought I would highlight. I meant to actually highlight that during variability. And since I just added that in here, I'll give everyone the opportunity to ask any questions about that. Any other questions for the good of the order? I think this time might be one of those times where we have tons of time for questions. So we have 24 minutes left. We'll be happy to hang around for a couple more minutes to see if anyone has any questions.
All right. Well, thanks, Michael, and thanks, everybody. Really appreciate it.
Thank you, everybody. Feel free to reach out to us. Those are our email addresses. We'll leave those up for a good solid minute here. And otherwise, thank you, everyone, so much. And we'll give you 23 minutes of your time back today. Thank you so much.
Thank you.
Thank you.